As an investor, especially in AMC, you need to pay attention to what is happening because we have so many things that can actually drive the short squeeze here. It is not going to be one thing. That is at least what I believe personally. It would definitely be the mix of many things. And inflation, as we know it, will drive the market one way or another. And today we had what we call the CPI data, the Consumer Price Index. And even though it came as expected when it comes to the price of food and energy, with what is happening in Russia, it may be a lot more higher than what we already have or what the market may expect in the next time we have these data coming out. But it has a major impact into what may happen here with AMC. All right. So before we get into that, let me actually give you details of this inflation thing because it's getting hot, man. First off, it came in today around 7.9. So 7.9 is the highest we've seen in the last 40 years. In January, it came 7.5, and it was the highest we've had since the last 40 years. I don't see if you kind of see which trend we are actually on path here. With Ukraine crisis in March, we may see 8, maybe 9. In April, if this thing hasn't, settled, maybe we'll see 10. Because in some places here in the US, gas prices are already above $7 per gallon. Man, this is huge. This is huge. Just in 2020, inflation was 0.3. In 2021, it jumped to 4, and it was already a concern there. But remember, look, in 2019, in 2018, in 2017, and you go back to all the way to 2012, it was always an average around 1.8 to 1.8. So it jumped from 2 in average, and so far, the second month or the third month into this 2022 year, it's at 7, which is high. Inflation is not good for the market and for the economy. But there is a catch. Inflation represents a slowdown or may cause a slowdown in investments, which is not good for the economy and the stock market as a whole. But it is definitely worst when you actually hold debt. When you hold debt, it means that debt is going to cost you a lot more. And we have debt in the forms of loans, in the forms of credit card loans, in the forms of student loans, but also margins. Because in order to invest in the stock market, usually investors will use the margin. This is kind of a caution and additional liquidity that the broker or the brokerage firm will actually provide you in order to continue to trade or to invest in. So if in March 2021, it was around 2.6%, and the Federal Reserve said, it's transitory, it's going to pass, it's just temporary. In July of last year, it jumped double. Inflation is not going to be temporary, but it's good because it's going to go back down. And then in January, it jumped to 7.5. Okay, it's not good, but just corporate greed, right? Because, these corporations in America are still trying to make as much money as they can, raising prices. And then boom, in March, it jumped into 7.9. And this is not even counting the jump into food, wheat, gas prices due to the crisis in Ukraine and Russia. And now it's like, man, what do we do? Just to kind of picture the Federal Reserve situation now. They already said we're going to increase interest rates in March by 0.25%. So the market already kind of expect that. But the market didn't have inflation this high when the Federal Reserve disclosed that information. So what is going to happen in April when they meet? Maybe they're going to jump it to, 0.75%, maybe 1%, because at some point, the Federal Reserve will have to do something in order to bring inflation down. And this may cause, or definitely will cause, the interest rate to go high. How does it relate to AMC? Well, first off, the short sellers here, whether they are hedge funds or investment firms or trading firms, in order to short sell AMC this high, this much, there is no doubt they had to go in margin. And we've seen what margin calls can do in big losses for companies that were involved in nickel commodity 2 days ago. All right? Margin calls is a thing. It is real. Bunch of hedge funds have been closing doors in 2021 which combined, it's higher than the entire number we've seen in the past 10 years. Why? Because when you make a trade and you use margin because you are confident that that trade will go through as planned, if it doesn't, you're wrecked. But they were able to actually get their way out so far because, first of all, nobody is monitoring and making it mandatory for them to report, to have that transparency, which is going to change starting this month. Second, when interest rate increase this dramatically, this quickly, this brutally, is going to cause a shocking effect. And that shocking effect may actually push them and force them to make sure, well, I can't sustain this type of debt, especially if the other stocks, the tech stocks that we love to buy and we're buying so far in 2020 and 2021 are now dropping 80%, 70%, 60% so far. What do? I need to cover. I need to get out of those short positions that are causing me to actually face bankruptcy. So it is a huge thing, folks. That's why I believe they've been holding on so far, because when this thing starts running and doing what it's supposed to do so far, man, the implications are huge for some of these short sellers out there. Maybe some brokerage firms as well. So it's not a matter of when, folks. It's not a matter of if. It's a matter of when, because everything is just lining up. They can continue to kick these down the road, but at some point, given where the market is heading with what I just shared with you, it's a no-brainer. Just hold on tight.